Hello, this is Deepak with Bansal team, your friends in real estate. Today, I am here with Mr. Hasmukh Patel. He has been doing taxes for last 30 years. He is a tax preparer with IRS certified. He does do 200 to 300 taxes a year. So, Mr. Hasmukh, could you tell me a little bit about you? And if it's okay, I can ask you a few questions.
Sure.
Okay. Mr. Patel, now the tax season is here, so I want to, tell my viewers as what to bring and how to prepare for taxes before they, bring it to a, accountant or a tax preparer. What documents?
Well, to prepare the tax, as usual, you need your wage statement.
Mm-hmm.
If you have a savings account and or CD account, your interest income, dividend income. If you have invested money in stock market, that will be a brokerage statement.
Right.
Then, if you have a business or partnership with somewhere, you will get the K1 or your business income statement.
Okay.
At the same time, if somebody is getting Social Security, that statement. If you have a gambling income, lottery income, all kind of income, including foreign income, you have to declare.
Okay.
As a resident in USA, you have to declare world income. At the same time, you will need for identity purpose, driving license, for deposit information or withdrawal information, your bank info, Social Security, date of birth, and those kind of general
Good.
information you will bring it to prepare the tax
Very
return.
good, very good. So nowadays people don't know whether they go to a tax preparer or go to an online program. What is your experience? Because I know some people do it on themselves, and then they come to you. What is your experience?
I will say I have a few clients like that because it's like just to save few bucks, they are trying to do at home, and so many online programs are available for free. They can do it.
Correct.
However, if they don't have the knowledge and it is just a question answer based, so when you just give answer some kind of wrong answer, then you lose some kind of benefit.
It can be.
It could be unincome credit, it could be retirement credit, it could be energy credit.
Okay.
So everything is not covered in there
Right.
because usually it is like a simple kind of tax return they do. If it is a complicated, it is better to get a professional help.
Got it. And they can save it in the past year and the years down the line.
That's right. We can check it out if somebody is coming here. If they have doubt, we can check it out even previous year tax return and recommend. If there is a possibility of benefit, then we can recommend for amendment.
Got it, got it. And nowadays people are getting so, towards electric car, they're thinking whether they should buy it, whether they should not buy it. I know there is a state rebates. Could you tell us a little bit about the electric cars?
I will say electric car is no doubt far better. It's for environment. You can see the India, Mexico, and all that, like pollution, China, and all that. So each and every country now enacting some kind of act to go for electric.
Okay.
I myself had two Teslas. And like until this time, 7,500 credit federal government used to give, but it is up to 200,000 cars sell only. So Tesla already reached that. You are not getting any benefit in Tesla in buying Tesla. However, there are so many other cars coming out. If they haven't reached 200,000 limit, then you are getting $7,500 rebate from government.
Right.
However, it is a non-refundable credit. Right. To know that more, you have to consult any accountant.
Got it.
For that.
And New Jersey still give a credit for that, right?
New Jersey just enacted that whoever buys electric cars, they will give $5,000. Plus, New Jersey benefit is there is no sales tax. If you buy Mercedes or BMW and spend 100,000, around 7,000 will be the sales tax. In New Jersey, there is zero sales tax by buying electric cars.
That's 7% you're saving right
Almost
there.
7% right there.
That's a big benefit. So now people ask me investments, whether they should invest in residential real estate or commercial real estate. What are the tax like years they can deduct that for?
Well, I will say any kind of real estate investment, whether it is in residential or commercial, it is good investment.
Okay.
If you live yourself, then you are not getting deduction if you improve or do any improvement in your home because
Correct.
you are own resident.
Correct.
However, if it is a commercial, that means you are renting it out, residential, but you
Right.
are renting it out, then it becomes commercial property. You
Got
can
it.
deduct each and every kind of expense. If you buy it, let's say 50 miles away, you go to see that every month or collect rent,
Yeah.
still you can deduct mileage and so many other expenses you can deduct.
So that's really good to know. Now we have like these education credits for professional education or for the child education. What are the limits for those?
Oh, child tax credit up to last year it was like $1,000. Now, like in Trump's time, they have declared that they will, if these kids are less than 16 year old, then you will get $2,000. If it is more than 16 years, any kind of age or any kind of dependent, parent or relative or anybody, then you will get $500 deduction.
Got
In education, so long as you will get 1098T, which is the education tuition fee statement from the college or any kind of institution, you have at least federal ID number, you get maximum $2,500 credit.
Wow, that's really good. Now, people ask me whether first time home buyer they should use the retirement fund or not. I know people can put down only 3% down and buy a house. What are your advantage?
I will say that if you withdraw $10,000, first time home buyer, then you don't have to pay any penalty. You still have to pay tax. However, still it is a good start because in 3% you are getting investment property. If you try to accumulate money for another 5-10 years to put 20% down payment, by that time that property will be like almost double in price.
Correct.
So by 3%, if you can get a commercial investment property and you make money, then I think it's a good investment. If you withdraw $10,000, then you pay taxes, no doubt. However, you don't pay the penalty.
That okay, that's good to know because people don't have that 20% down for buying. So, could you share one story that you like to tell that people don't pay attention and that can be a costly mistake down the line in terms of foreign income or interest they earn from foreign investments?
Yeah, I would say, yeah, well, that's the thing, foreign income when you use the word, because so many people had like investment income or savings or whatever interest income in foreign and they don't declare. There are 2-3 cases where they have been penalized. More than 50% they will take away. Right now there is the rule that if you have more than $10,000, you should declare it in here. You get the statement from foreign bank account.
Right.
You get the statement, you declare here,
Mm-hmm.
and otherwise it will be very costly. More than 50% you will lose, and if you don't declare those things, it could be considered a fraud and it could be punishment as a prison too.
Oh wow, that's good information. Thank you so much, Mr. Hasmukh. It was pleasure talking to you, and thanks again.
It's my pleasure too. Thank you.
Okay, bye.